the rent is too damn high for a lot of people, which is where you come in.
Yeah.
So Margaret, for those of you who are not familiar with her work, worked at Goldman Sachs for some 20 years and left to join the Vistria Group. So tell us about Vistria and why you decided to make that move and what you're doing there.
Sure. And thanks for having me. This is a great discussion. So the 20 years I spent at Goldman, the majority of that time I was investing in areas where we thought we could do two things. One, generate an incredibly strong return, but also do so in a way where we could be productive for individuals, families, communities, whole neighborhoods at the same time. And so a significant amount of that work was in real estate, and a significant amount of that work was in affordable and workforce housing. And so in my last couple of years at Goldman, I realized that relative to the opportunity set, the amount of institutional vehicles dedicated to not just housing, but affordable and workforce housing with a dedicated strategy wrapped with real expertise around the area was, quite frankly, close to zero. And so the Vistria Group, which is a private investment firm headquartered in Chicago, we invest in three things. So we invest in companies, we provide private credit to companies, and where I'm focused now, investing in real estate. We do that all around the thesis that by being, first and foremost, investing in these heavily regulated sectors that have a significant impact on people's lives, right? Healthcare, education, financial services, and now real estate, we can have a really positive impact on, quite frankly, society at large through those areas. And so that's what I'm doing now, real estate at the Vistria Group.
So give me some of the examples, give people some examples of the types of projects that are now in your portfolio.
Sure, so just keeping going with that, the rent is too damn high. Many of the projects we're invested in do kind of three key things. One, we invest in existing affordable and workforce housing. So there's an existing stock around the country that needs to be managed well, where we can introduce residential services, where we can do important work like increase the sustainability of these assets so they not only are more environmentally sustainable, but also just fundamentally operate better. And then two, we actually add to the existing of affordable and workforce housing stock through the traditional way, new construction, so building new units, but also one of the areas I've been really excited about recently, taking market rate housing and converting it into affordable and workforce housing.
How do you do all of that, keep the housing affordable and make it profitable without raising the rents?
Sure. I mean, one of the key, I would say, misconceptions around the space is that you can't, and actually across a lot of the work that we do, is that you can't do this work in a way that is economic and profitable, but also meet your other objectives as well. And so really the secret sauce, if you will, in the real estate work that we do is partnering with government. So both at the federal level, state and city level, we work with the public sector to identify the sort of part of the spectrum where affordable housing is needed. In a place here like New York City where we're sitting, it's at the very low end of the income spectrum, quite frankly, to the really top of the middle class can't afford housing responsibly in New York City. And in some areas, it's really just at the low end. So we work with public sector to structure deals where we can put in long-term affordability agreements and structure that in a way where the investments are also profitable.
In your view, how did we get here? There's a lot of talk about a supply crunch has created the affordability crisis. Of course, rates, mortgage rates are still relatively high, but that's not necessarily directly tied to rent. Why has it become so acute?
Yeah, and it's interesting because there's been so much, I think, more mainstream conversation around the affordability crisis. I would say over the last few years, certainly we talked about it a lot during COVID, but we really started getting here much earlier. So it's fairly simple. If one, we haven't built enough and wages haven't sort of kept pace. But if you just look at a few key numbers, so the amount of homes we were building sort of right up until the GFC, roughly 2 million homes a year, that of course plummeted in the global financial crisis. And even as we rebounded coming into COVID, we still only got to about 1.2, 1.3 million homes. So we are still not, as a country, producing the amount of housing that we were before, and that we need to keep pace with household formation and just the steady growth you need to keep pace. And then on the other side of that, you have the other issues just on the cost side. labor's more expensive, construction costs are more expensive. There's a set of sort of zoning and land use bureaucracy around the country, and certainly at the local level, that also makes housing construction take more time. And as we know, time is money. So it's really about not having enough supply, real wages being flat, and just quite frankly, never really getting back to the level of production that we had 15, 20 years ago.
Now, Bank of America CEO Brian Moynihan, many of you heard that conversation. He brought up the idea of, well, I guess a couple of things. Incentivizing new construction in order to try to alleviate the housing crisis. That's something that Vice President, of course, Kamala Harris talked about on the campaign trail a little bit. And the other issue is the permitting issue that you brought up as well, making it easier to build new construction. How do you attack those? Do you think incentives is a good method? And are these things being alleviated at all?
Yeah, one of the things that's difficult about really addressing the issue around the country at scale. You mentioned Kamala Harris's proposal, certainly speaking from the federal perspective. But when you look at much of the zoning, land use, entitlement process that really does slow us down around the country, it's really at the local level. It's city level regulations, county level regulations, and state. And so the idea that we could have a silver bullet from a zoning and entitlement perspective that comes down from the federal government, I think is pretty tricky. Now, there's certainly things that the federal government can do, but I see more productive areas there in things like rental assistance, the work that they can do in financing costs with the GSEs through Freddie and Fannie. But entitlements, zoning, those are really a local game.
Just to keep it on the federal level for a minute and talk a little bit more about the election, this was definitely billed by some as the sort of anti-woke election, right? Elon Musk, railed against what he called the woke mind virus. And the work you do at Vistria as a whole sort of identifies itself as a purpose-driven firm, right? That is making these types of investments, right? In that sort of way. Do you think that kind of work is in danger at all under this new administration, either sort of directly through regulation or philosophically?
Yeah, it's a tough question because first just thinking about the sort of woke or anti-woke, I don't know that anyone, regardless of their political persuasion, would think that people being able to pay their rent is woke, or people having access to quality health care is woke or anti-woke. So I don't. It's hard to think about the work we do on that spectrum. I would say, sort of zooming out a bit from a political perspective, on the housing side, one of the things we've seen, and it's a bit of a consequence of just how deep the crisis have gotten. We are working on really important structures in places like Texas, just as much as we're doing them in California, as we're doing them in New York, in Florida. And so what you're seeing, the idea that we want, individuals and families to be able to pay their rent and then invest in all the other things that are important for their lives, it's not red or blue or conservative or liberal. I think it's gotten to a place where it's bipartisan and it's really about all of us as a whole.
Also, as you talked about, part of the work you do is making these buildings more sustainable in many cases. Are there federal level incentives that you take advantage of on that front that could be jeopardized? Yeah,
there are some that have become a topic in the news. One of the things that I think, again, from both a red, blue, bipartisan perspective, one of the programs from the last administration, the Greenhouse Gas Reduction Fund, was a pretty large program that entities could utilize to reduce or avoid greenhouse gas emissions. And there was a lot of talk and excitement about what impact that could have in the affordable and workforce housing space. I think that one's an issue. But, at the same time, we saw similar incentives, again, at the state and local level. So there's some things on the margins that could move. But I think the fundamental issue of housing being a focus from both sides, I can't see that changing anytime soon, regardless of, quite frankly, the outcome of the election we just had.
One of the other areas that has become political at times or has sort of come under bipartisan criticism at times has been the private equity investment in housing. Now, I believe most of what you do is multifamily.
Yes.
And most of the subject of the criticism has been private equity investment in single-family housing, for example, as maybe something that is driving prices up or keeping prices high. How do you think about that issue, and how would you respond to that issue?
You know, it's such a nuanced issue, and like all these things, it has multiple sides. I think the criticism around private equity in single-family rentals is rooted in this idea, like you said, that private equity is owning these homes and communities and making them more expensive.
It's sort of crowding out investment.
But you also see the flip side that many of these typically majority single-family home ownership communities with their great public schools and other amenities that private equity and single-family rental has actually provided access to folks to be able to rent those homes to individuals and families who would never be able to purchase them. And so on all these issues, it really gets complicated. I would say that the bigger issue that I think is really important, regardless of whether a single family home is rented out by a mom and pop or rented out by a larger private equity firm, the issue is how do we drive affordability? Because I'm sure you could find several mom and pops across the country who are renting out homes at prices that people can't attain. So I think, again, it's about getting to the issue of how do we drive housing to be more affordable and less focus on who's the owner of that home.
I was listening to Tom Steyer earlier, who was talking about climate investing. And something that he talked about sort of resonated with me, and I think would resonate with you too, where he made the point, like, you still have to make money on this stuff. Oh. It's not like you can donate to a charity that's going to work on some of these issues, and you can also invest in some of these things and get a return. So how do you, when you're making these investments, how do you sort of weigh, okay, I'm doing this because I want to make this affordable, and I also need to make a return for myself and my investors out of this?
Yeah, so first and foremost, on the affordable and workforce housing side, it remains the most supply constrained part of the multifamily market by far. So in terms of just the risk adjusted returns that you can achieve, they're phenomenal. So whether someone is motivated by a personal passion around societal issues or really cares about the affordable housing crisis, it's just a space to invest where you can make strong returns. And part of that is about a different supply-demand imbalance. When I look at just the capital need to get out of this just pure supply problem we have, plus the capital that's required to really just fundamentally restore and upgrade our housing stock across the U.S., we're not talking billions, we're talking trillions. And so Tom Steyer's point about the charity, it almost becomes irrelevant because there's not enough charity to build the amount of housing we need. And so I think charity's not an option. Charities is amazing to innovate around new issues.
And to be clear, his point is you have to make money. This stuff has to make money. That's the bottom line.
Well, and I guess I agree, because when you have a capital need starting there of $1 trillion plus, there's not charity to fill it. And it is a great fact that you can do this work and also generate a really strong return. So I spend less time in that debate of kind of charity versus returns because the returns are there. And quite frankly, the returns need to be there to attract the amount of capital that we need in the space.
Are you optimistic?
I am optimistic because I choose to be. I think one thing, and I have been saying this for the last few years, there was a time, and 7 years, 10 years ago, we wouldn't really be having a conversation about affordable housing. It was people felt like it was such an issue in New York City and San Francisco. It was, all about the gateway markets. And I think I'd love to hear what you guys think, that it is now kind of well understood that the rent being too damn high, the percentage of renters versus owners in the country also being at an all-time high, that is an issue that is urban, that is rural, that is Midwestern. And so I think that gives me optimism. Once you have sort of a coalition and a tent and just a broad base of not just individuals trying to pay their rent, but also on the policy side that understand it, I think that's when you have real real innovation and progress. So yes, I am optimistic.
And do you feel like the states, I mean, you mentioned obviously blue, red, whatever states, different places. Do you feel like by and large the policy on that level is moving in the right direction?
I do, and there's so much creativity around it. So for example, one of the places where we've seen less activity over the last few years, just with the rapid rise in rates, was around new construction. So you have the entitlement issues, the zoning issues. It takes a long time, and construction loans are a lot more expensive than they used to be. We've seen so many cities and states around the country say, okay, well, we're not having the new supply that we've had. What can we do with our existing stock? And so one of the new tools, and we've seen this in Illinois, Florida most recently, Georgia just enacted a new program. How do we take our existing stock, so let's bypass 3 years of entitlement and construction, this and that, and figure out how to make our existing stock more affordable? And I think that's a one-way trend. So we do see more innovation and also a lot of collaboration across cities and states and mayors saying, what are you doing that's working? What can we try? And I think that'll continue.
One of the other themes that I've heard a lot about today is investing in private assets, and obviously real estate being one of those, diversification, getting into other things. For the Yahoo Finance audience who says, I can't click on a stock and buy what Margaret is doing, what are the ways they can think about potentially getting into that market? Are there ways that market is getting more accessible?
Yeah, this is a tougher one because I think we're in the, you always see these things get heavily adopted by institutional capital and then sort of find its way, to high net worth and then further into retail. And I think, at least in the work that I'm doing, we're honestly in the early stages, even on the institutional side. So I mentioned, we think about the capital gap or opportunity, if you will, as between 1 and 2 trillion. When you look at dedicated institutional funds focused on the space, it's less than 10 billion in total. So I think we have a ways to go in our space before we're getting to that level of access, but I do think we'll get there.
And the growth that you're talking about, I think you told me you have about $2 billion in assets in the value of your portfolio right now.
I think I'll get killed by the SEC if I answer that.
Never mind. I'm just kidding. What I was going to ask is
bad joke.
How much opportunity do you see for what you're doing, for how much growth you're expecting?
Yeah, so we think we can put about $1 billion to work in affordable and workforce housing each year, and still be nowhere near kind of eclipsing the opportunity, if you will.
All right, Margaret, thanks so much.
Thanks for having me.
We won't get you in trouble, don't worry.